Now, Ren, I have a question for you. Are you investing or are you speculating?
Always investing, Bryce. Always investing. Now, for people who aren't familiar with where this question comes from, it comes from Seth Klarman, one of the best investors of his generation, who wrote the book Margin of Safety. Now, he asked, are you investing or are you speculating? Because people will conflate the two things, but for him, they're different. Speculating is when you buy something with the expectation that someone will pay more for it in the future. You buy a Picasso. You'd better hope there's someone who loves Picasso or who's an art collector, because the only way you make money on that is if you sell it for more than you bought it for. A bar of gold, same thing. That's not spitting out income for you. You've got to find someone who's going to pay more than you paid for it. Bitcoin, same thing. You are predicting that the price will go up and someone will buy it off you for more. Even property, and this is controversial because there are ways that you can make income from property.
But I mean, principal place of residence. You're literally buying it.
Even an investment property, you can subdivide it, you can rent it out, you can do all these things. But at the end of the day, the block of land you buy is the block of land you sell. Yeah. It doesn't fundamentally change all of those asset classes. They can all be great investment asset classes, but they rely on an element of speculation because they rely on someone being willing to pay more than what you paid.
That's it.
It's different when it comes to investing in companies and the stock market.
Yes, which is why we think the stock market is the best option for investing. So if you're buying a share in a company, it is constantly changing. It's evolving, it's growing. What you buy can be completely different from what you actually sell. It's the company is managing a group of people who are out there actively working for you as the shareholder, building products, expanding into new countries, trying to be more productive. And the way that you make money in the stock market isn't just by finding someone willing to pay more for the same thing. It's letting the companies themselves actually become more valuable.
Yeah, to wait as the people running these companies find ways to make more profit, to create new products, to expand into new markets, and in some cases to come up with entirely new businesses.
Well, give us an example.
When you eventually sell, it's completely different to what you bought.
Yes.
You want an example?
Yeah.
I'll give you an example. Let's look at Amazon, the online retail giant. Amazon listed in 1997.
Yep.
If you had bought a share of Amazon in 1997...
Bezos had hair?
Oh, don't know about that.
Okay.
Bezos certainly had less HGH, allegedly.
Yes.
Well, no, not HGH, testosterone.
Yes.
So Amazon at the time was worth $438 million. It was an online bookseller with 256 employees and $15 million in sales.
Yeah.
A fine business. 24 years later, if you just held on until 2021, Amazon was a retail giant and a web services provider with over 1 million employees, $280 billion in sales, and worth $1.6 trillion. What you bought was shares in an online bookseller. What you sold was a much bigger, much better, and much more valuable company. And here's the thing as well. It's not even like you had the same number of shares in the company because of all the share splits. And it's not like you even had the same percentage ownership of the company because of all the buybacks.
Yeah.
So like what you sold, how much you had, what percentage you owned, it all fundamentally changed over time. And that is why we love investing. Now, Amazon is probably an extreme example. It's definitely an extreme example. It's one of the best investments of that time. But
any tech company.
Yeah, but I think that we can take the most exciting retail investment, but we can also take the most boring retail investment.
Whoa, come on.
Let's look at Woolworths.
No.
Because the same story plays out there.
It does play out. Very exciting company, may I add. 20 years ago, it was Australia's largest supermarket. Even starting out as such a big company, it's grown and changed over those past 20 years. It's tripled the number of stores, expanded into new countries. It's gone online. It's got multiple divisions now beyond just grocery retailing. The business is constantly trying to find ways to make you money as a shareholder.
Yeah, so to put numbers to that, so in 1997, as you said, it was Australia's largest supermarket, but it had 125,000 employees, 1,114 stores, and $20 billion in revenue. Fast forward to 2021, it still was Australia's largest supermarket, but it had 215,000 employees, 3,357 stores, and $64 billion in sales. It had almost doubled its employees, it had tripled its store count, and it had more than tripled its revenue. The thing that you buy and the thing that you sell, even though both of them just said Woolworths on the tin, they are fundamentally different. And so to tie it back to the question, are you investing or are you speculating? It's not like you're buying a painting or a bar of gold and asking and assuming that at some point in the future, someone will pay more for that same bar of gold or that same painting.
Picasso, yeah.
The intrinsic value of the thing, the economic value of the thing, the amount of profit it creates, the amount of income it pays you in dividends, like that fundamentally changes over time. And sometimes it changes for the worst.
Yeah, I was going to say, can't go the other way.
If you pick the wrong stock. But what we've learned time and time again,
it's not based on
generation after
speculation.
generation, is that there are some massive winners at every generation, and your job as an investor is to find those winners and hold on to them, or to buy an index that through the structure of the product will have those winners in it.
Yes.
But that's why we love investing.
We love investing, and that's a high note to finish on. If there's anyone that you think needs to be convinced as to why they should start investing, maybe send them that segment, because that's left me feeling pretty pumped, as always.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Equity.